Well, good afternoon and welcome. Welcome to another of our Webinar Wednesday series. Number 11 in the webinar series of managing your small business during the pandemic. Spent a lot of time working with particularly the SBA programs out there, the EIDL program and the PPP, a couple of business funding programs. Going to continue some of that today, talk about some others, and a lot of good stuff coming up. So good afternoon again. My name is Kelly Bearden, and I'll be your host today. And I will be introducing in a little bit Keith Brice, who will be our special guest again. And what we'll do is we'll spend the next hour going through your questions and other information that you might have regarding these particular loan programs and restarting your business in Kern County and elsewhere in California. So a little bit about things before we get going. The SBDC program, being the director of the CSU Bakersfield SBDC program in Bakersfield, we cover 3 counties, Kearn, Inyo, and Mono, and we're part of the SBDC Central California region that encompasses the Central California region from the Pacific Ocean, state of Nevada, to the south of Kearn and the north of Mono counties. 14 counties on all during that swath of Central California, providing you services such as free one-on-one business consulting and other training programs such as webinars and other physical training programs when we can actually get in front of you again. We've been doing webinars at the CSU Bakersfield SBDC since 2013, probably done about 125 or so. Not used to doing them every Wednesday, but that's the way it's going to be for a while. So thanks for joining us, and let's get going. So a little bit of our sponsors that we've had over the years. And so what's up today? May 27th, our 11th week into this. We're going to talk a little bit more on managing. You're going to hear the word managing a lot today because we're going to be managing our PPP program, our Payroll Protection Program. And also talk a little bit about the forgiveness form that came out on the 15th and came out with some modified rules last Friday. So we've had 2 Fridays of actual releases from the Treasury on the PPP program. There's another one coming this Friday. We're going to talk about an exciting new loan program that the County of Kearn is putting on, and that is the Kearn Recovers program, and it is actually now live. We're going to talk a little bit about it and about how it could help your business located in Kern County. Talk about the $25 million that's available to assist businesses and to get money in their hands and get them open and get them going again. We'll do a very quick EIDL PPP update. Not a lot of breaking news, but maybe the holidays slowed us down. And of course, as always, plenty of time for your questions and also a poll question. So there you see Keith. I'm not going to introduce Keith today. Let me jump to the poll first. Launch this poll, and it's your biggest concern managing the PPP. And we have 5 options for you. And what you're seeing is that number 1 is you need more time to spend the money. You need to be able to open your business. You need to learn how the debt can be forgiven. You want to make sure your employees come back, and then all of the above. Boy, you know, all of the above. Tricky question, because you might only like 2 of those really strong, or you have one that's really stronger than others. But we're getting 3 really strong ones. Numbers 1, 3, and 5. So the one in the middle, learning how the debt can be forgiven, is what we've been talking a little bit about every week of this. It's coming in around 43% right now, and all of the above, 27. So give you another minute or 2 to vote, or excuse me, second or 2. And we're going to end the poll with 68% of you voted, and share your results. And your biggest concern is really a lot of those, but really it's the debt forgiveness that we're going to talk about today, and to see how you can manage that to debt forgiveness. And they're not making it very easy with all the rules that aren't out yet, but and all the other implications and things that can happen, and hopefully will soon. So 43%, 31% for all the above, 21% need more time to spend the money. Hopefully that'll be coming. And stop that. And that's our poll for today. Only one question. Going light on you. So got that covered. And let's bring Keith in. Keith Brice. Keith Brice joining us. Has been what I'm going to start calling a semi-regular on the Wednesday webinar, and is joining us to bring his expertise. President and CEO of Mid-State Development Corporation, which is the largest SBA lender by volume in the county of Kearn, and probably, through a wide range throughout even Central California, for that matter. So Keith, it's great to have you on, and great to have you back. And what's your thoughts of what happened this last week?
Hey, Kelly. Well, thanks again. I guess eventually we're going to wear out our welcome with PPP discussion. And I feel bad in that we are slowly getting information on the forgiveness. It seems like every Friday we get an update, and I was kind of counting on that we would get the update on the extension rules changing, and we haven't. I know there are, and we talked about this before, there are 3 proposed bills within the House. I'm sorry, 2 in the House, 1 in the Senate, talking about changing or modifying the PPP. And it's exciting, some of the information on there. I will tell you, there were some sort of hidden nuggets in the release on Friday. I don't know if you want me to get into that now, Kelly, or not, but it sort of set off somewhat, I don't want to say an alarm, but it gave me a little bit more insight as to what the SBA is going to look at when they start monitoring a lot of these loans that were made over the last 3 or 4 weeks.
Yeah, let's talk about it now. We'll circle back and get to that in after we look at the Kearn Recovers program. But let's talk about our speculation, because last week we came on and we speculated and had maybe 3 items that we looked at. Was hoping that we would have a final verdict today for those, which would make our planning and managing the forgiveness aspect a little easier. We don't have that. But what did you find in the release that came out on the 22nd on Friday that disturbed you?
Well, the main area that came out was, and I'll actually read it. It's in a 19-page, as they tend to do, an interim rule on the PPP. And the first one, it establishes the SBA may review any PPP loan regardless of size. Keep in mind, we talked about the $2 million threshold in the past, but now this interim rule comes out that the SBA may review any PPP loan regardless of based on size, and that's to determine if the borrower is eligible for PPP loans under the CARES Act, whether the borrower calculated the loan amount correctly and used the funds for eligible costs, and whether the borrower is eligible for the amount of loan forgiveness if requested. So what that's saying is that, you can have your PPP application reviewed by the SBA to determine eligibility. Now, it also gives some timelines. Again, this is rolled out last Friday, where if the SBA makes a declaration that a loan is not forgivable, there is a 30-day appeal period, which again, they're specifying that. They also gave some specific guidelines to the lenders where they have to, within 60 days, and that had been in a rule before, but they tightened it up a little bit. Within 60 days of a request for forgiveness, it has to be submitted to the SBA. And then this is where the devil's in the details. The SBA then has up to 90 days to review the loan forgiveness application. So is that 60 plus 90, or is that 90 within that 60? Stay tuned. But what that tells me is that there's a little bit more oversight that's going to happen with some of these PPP loans. It also indicates that if you have a lender that makes a PPP loan and the SBA subsequently determines that the PPP loan was ineligible, the fees that the lenders received can be deemed ineligible, along with a year clawback, the ability to go back and get that. Now, as a lender, these kind of things always make me a little bit leery. And quite frankly, that was part of why some of the lenders were slow to roll out the PPP program, because of the final details and making sure that they had all the documentation. So again, those are some of the things that in the rules that were rolled out last Friday that I found interesting. May not for a lot of folks, but as a lender, it tells me that they will look at all PPP loans on a case-by-case basis, not specifically just the $2 million loans.
Yeah, and I think that when we start talking about forgiveness, we talk about taking our documentation and doing our 11-page form and going to our lender and getting it signed off basically by the lender and thinking that we're done. And that's what that document, that's what that rule showed me, is that we still have to have everything in a row, everything kind of accounted for. And even if we get signed off by the lender for our forgiveness, we have to make sure we can substantiate that down the road. So
one other little piece I don't want to neglect within the rule, they also stated, and we had talked about this before, but I think they clarified it. In the forgiveness calculations, if you have an employee that refuses to return to work, that the employer is required to provide that information to the state's unemployment agency within 30 days of rejection. So again, that's one of those little nuggets that you have to be aware of.
Well, while we're discussing that, we've been getting a lot of questions on the EIDL loans, not the advanced, but the EIDL loans. And we're now starting to see a lot of them roll in for our clients and others that have been contacting me. And they're good size EIDL loans in most cases. A lot of them are close to the maximum now of about 150,000. And there seems to be a lot of borrower confusion on how they can use the funds, and also the timeline and several other questions that aren't really explained really good in the document. And I think part of the reason is it's not really explained is that typically with an economic injury loan, it happens in a community where you've had the disaster, you've had the hurricane or tornado roll through, and you can clearly identify what your problem is and what you're fixing. So I think that we're seeing a lot of people that are just not clear on what to use the funds. And this is something where they really need to go through their document very carefully, because in there it says that the funds are to be used for working capital. And I think sometimes people get a little different definition of working capital, but we're starting to see a lot of this where I'm really concerned about EIDL loans actually coming back and actually being reviewed in detail by the SBA and not having that documentation. So when we have maybe some more information, and maybe there will be some more final rules on EIDL, even though it's been around for so long, or more definitions on exactly what people can spend it on, how long they can spend it, the documentation they're going to need to provide with to the SBA and so forth. But have you heard anything on this, Keith?
Yeah, Kelly, I have, and I will tell you, I've talked to several, and when I say several, quite a few customers that have gotten the EIDL loan, and they have actually called the SBA and gotten a lot of guidance. So the SBA, again, the EIDL loan is a direct loan from the SBA. So once you get your approval, then you get your documentation, you can call that. You can call the SBA There's the 1-800 number. And I have not heard of any negative experiences when talking to a loan officer with the SBA. And they, I'll give you, this is sort of a easy example, but I had a customer that got a idle loan early on for his business, and he had a personal line of credit that was not in the corporate name, but was in his personal name, but the proceeds were used for working capital within his business. He reached out, again, concerned, didn't want to misappropriate any funds, and he talked directly to the SBA loan officer that was assigned, and got the green light that it was acceptable. Obviously, he had to have his documentation, showing where the funds were put into the business, but that was acceptable. Now, having said that, word of caution: document, document, document. So if you have a similar example and you have documentation showing that the use was, in this case, it was a line of credit for the business, make sure you have your documentation. The one thing the SBA is very very good on making exceptions if the exceptions are supported with documentation.
And this is, I think, something we will be talking about in detail, maybe in a month from now or so, after we get through all the PPP stuff. And a lot of people start burning through their payroll that they use for PPP. I see payroll being a very likely source for idle loans for working capital moving forward. And so when we get kind of through this PPP maze of figuring out the forgiveness and getting everything documented in this program and the timeline wrapped up, we'll revisit this topic and come back to it. Well, this is exciting. We get to talk about something other than idle PPP and cash flow and other loan programs out there. And we have another loan program out there. And so what we're talking about is Kearn Recovers, and it's a loan program that is a small business program, and it's geared for businesses in Kearn County. You must have a physical location. So those businesses in Kearn County are able to apply for the amount of $75,000 for local businesses. They're really looking for those that have been impacted and really are having issues starting up. The ones that are commonly have been mentioned are restaurants, gyms, and salons, and others that have been significantly impacted as we return to work and as we return to our businesses. So the program is similar. It draws some similar ties to the PPP program. There's a lot of different variations to it, though, that have kind of made the program maybe a little stronger locally than the PPP, and given the time and being able to see the direction of where PPP has gone. So we have, yeah, go ahead.
I'm sorry. Yeah, well, one of the things, I was excited about it because they've talked about it in the website that's live right now. But one of the things, again, I always like to get into the details in that they're looking at a different split on the use of proceeds. And what I was able to see early on was, they're looking at 34%, I think it is, for payroll, up to 33% for rent, utilities, and mortgage interest, and then 33% for working capital. So, that's a clear change from, the PPP, the current, let me quote unquote, the current PPP eligible program. But that's somewhat refreshing in that it's a little bit different. So yeah, that is I think it's an exciting program.
A few of the different changes and variations as far as eligibility guidelines is they are allowing certain nonprofits. Nonprofits had to be a 501c3 for the PPP program. Here, membership organizations such as 501c6s and veteran groups such as 501c19s are available. So they can jump into the fray and they can apply. And then it comes down to where they're really going after the small business, 50 or fewer W-2 employees. Sales have to be 5 million or less in the calendar year 2019. And then they do have to be defined as a local vendor by the Kearn County ordinance, as you see right there. So exciting program that is now up and going. I skipped by and Keith, we have 4 financial institutions locally that are actually partnering with the county.
Yeah, four very good community-based financial institutions. So I think the county was smart in engaging those four players. And I think, Kelly, it sounds like this is going to be a separate webinar coming up pretty soon.
Well, it very well could. Depends how long the funds last. If we can make it until the funds last, and it looks like that'll happen though. Okay. The one other thing with those 4 lenders is the county has approached them, whereas I think a lot of our borrowers found out with the PPP that you needed to move your banking relationship to the particular lender that when you actually got a PPP loan or opened an account. The county has requested that that not be a provision of these 4 lenders, and it's my understanding that that isn't going to be a condition of getting one of the loans. A few of the other things real quick. I mentioned again, there were first preference to those that were severely impacted. And again, that also gets into, hospitality and tourism and events and other type things. But they're going to really do something as far as really look at to make sure that your business has been significantly impacted. Also, I believe that the nonprofit, I think a sole proprietor can apply, but I do not believe that an independent contractor can. And as you see here, it's up to 4 months of monthly payroll, so it's a much longer term. We could have one that's a PPP that's 4 months, but we won't know until, who knows, maybe this Friday. Some of the other eligible payroll costs you see there. And again, it's for sole proprietors, but it's the same requirement of the PPP, whereas you need to have your 2019 Schedule C tax return. So exciting program, and it's up and going, it's live. Now they do have a requirement or a rule we haven't really heard. It was nice of them to throw in that they recommend that you use the CSU Bakersfield SBDC for consulting. They talk about the loan forgiveness and repayment. And then there's a full PDF. So you can go to the website, and we'll include that in our resources. Probably just go, it's on the kerncounty.com site. You can probably find it once you get there. So good news, right? Okay. So, is there anything else we need to talk about EIDL and PPP? Well, PPP still receiving applications, and we're still waiting for final guidance. This is starting to sound like a broken record. How do we vary from our tips last week of what we thought and where we got to speculate on what would happen? What do we know today other than the fact that there's been 3 pieces of legislation that has bipartisan support? So it sounds like it's going to happen.
Yeah, Kelly, again, we are somewhat of a broken record, but I know it's going to change. It's just a matter of when and what it's going to look like and how aggressive they're going to make the change. Hopefully it's a one-time change with other modifications on whether it's exceptions or problems that they have. But so I fully expect that you're going to see some changes, and it's got to happen. It's got to happen within the next week, 2 weeks max, because you have a lot of the early PPP loans that are going to be asked for some forgiveness. But keep in mind that time frame that I had talked about early, albeit you may be at that period to ask for forgiveness, there is that 60-day window with the bank and the 90-day window with the SBA. So it's not going to be a mad rush with forgiveness right away. Yeah.
So we did get the FTEs more or less resolved, and we're looking for a longer window. And for those that got the very first PPP, their 56-day window, Keith, is Friday.
No, I know.
So they're 2 days away. And I know there's a lot of people that are even close to that are really speculating. So that is why I'm at least guessing that we're going to have information on that on Friday. But hopefully we can get it passed. We can get a longer window. maybe even different uses and different time rates and things like that. So, okay, so let's jump into, I've been using this little spreadsheet to kind of help us figure out and actually get to where we're trying to go. And I've made a little bit more modifications, and I just wanted to go in and give you a visual kind of look at things and maybe kind of help spur some questions, because you can go to our question box and pop in some questions. We're going to try to leave plenty of time for questions today and handle them in a little quicker fashion and a little calmer fashion rather than the mad rush to go through 20 or 30 minutes worth of questions. So what I'm going to do right here is just kind of go over these PPP calculations that we've seen, and you've seen these. This is the fictitious business Kelly's Grill, world famous, maybe not. And there's the annual payroll. We came up with a PPP. The important thing, and the reason I like to keep showing the annual payroll from 19 and how the calculation was based, is that it really kind of helps a lot to really kind of show as you spend down this money, how it was intended to spend. And so $100,000, and for 2019, there were my FTEs. I had 11 full-time people, or at least Kelly's Grill did, and 8 part-time half-timers, so 15 FTEs. That's the number I'm going to keep working at. And so let's go into the covered period here in a minute. Here are a few more stats I want. This is the April 15th projection of what my payroll would have looked like for 2020. You'll see my full-time and my part-time employees, the 8 positions available for each of those right there. They both received minimum wage increases. And also in this example, I had the owner's salary in this particular PPP. So I was able to actually be in an LLC, and actually a different entity was able to cap off at $100,000, of which that is what I took. I said, okay, before, just to show the calculation, it was 120, went down to 100. So some of the key figures there on FTEs. Well, FTEs on February 15th was 15 still. But then in the final notice and final regs that came out on the 15th, as far as the SBA forgiveness form goes, it had 2 important dates for FTEs. And one was April 6th and another was April 27th. Now, April 6th was the first day of my application when I applied for the PPP. And that'll come up in some of the rules that we look at in a little bit later. But also, they wanted to look at the difference between what had happened on February 15th when my business was fully functional before the pandemic, and what it looked like afterwards, and what it looked like after the shutdown, a month into the shutdown, of where our business was pretty much closed except for doing some takeout. Okay, so there's a little bit about the employees. And, again, this is the example we've looked at before. This is our managing tool, the one that we're doing the forecast with. And if you recall, $100,000 loan, the date, actually my covered period begins on April 20th and goes 56 days until June 14th. So, and this is an important box right here in the 12D box, where it shows the amount of proceeds I have left. Little summary over here of what's going on, and this is a projection moving forward. You'll see I just made my 5/25 payroll for week 5, and that's where I am. And on my other form that I have for Forgive Me 1, it will show the actual. But I'm using this as a tool to try to estimate how I can use the money best and wisest over this period of time. Okay, so that's a little recap. You've seen most of this before. And it's important because now we're going into our covered period with our individual employees as far as FTEs go. So let's do that right there. And this is going to translate in total into our PPP Schedule A Worksheet, which is really what we found out last week was one of the more important parts of the 11-page document, and really is kind of the basis for a lot of the calculations go from there. You might recall I thumbed through it backwards and found it before some of the other things such as the Schedule A and then the PPP forgiveness form. So what are you looking at now? Now you're looking at me being an optimist and anticipating that after 8 weeks, it's extended for at least another 8 weeks. And so I've kind of taken the spreadsheet for each of my employees. There I am right at top, Kelly Grill. And the first thing you need to look at is, since I was at the maximum level of 100,000, I term out right there. There's my 15,385 rounded up. And that is the maximum that an employee can receive from the PPP. So you'll see that even though we had some money kind of carrying forward after the 8 weeks as planned, my salary in weeks 9 and 10 will be 0. So over here is the name of the employee, and thanks, Matt, for coming up with this thing. And what you'll see is the name of the employees. The checkbox shows they were employed on 2/15. And in my example, first we have an F for 11 full-time employees and then 8 part-time employees. Scrolling down before I get into that detail, I also have a list down here of those that refused employment. Because remember, if I have somebody who refused employment up here, and I did have a few people that refused employment, and they're listed, and they're listed as far as their full-time equivalent and their date. I just listen my source documentation because I need documentation. I can print out a text, I can print out an email, I can get a letter. I don't know about a voicemail, probably not, but you need some type of written documentation. So the first of my people who didn't want to return to work was Sunny Smith. And of course, in my example, I showed that she did draw a little bit of wages, so I'll have to fix that. But let's say Sunny Smith or someone else didn't because of fear. I don't want to come back to work. I feel that it's not safe, and the environment of a restaurant doesn't make me feel good. Big Al here, he didn't want to come back because he was drawing unemployment. And Betty wanted a full-time position even though she only worked part-time. Those are all acceptable refused employment offers that you make these people. And so these count as 1.5 So it counts as 2 full-time equivalents when I add up my regular employees at 6/30. That's right, June 30th is why this is green here, because that's the date I need to, as my safe harbor, hit my FTEs in order to actually then meet the requirement for employment for forgiveness. So I didn't offer a job to Bill Mars. He's on another planet, probably a little politically correct, the reason I put up the stoner, but he was my delivery guy, and he was showing up smelling of marijuana. And you know, it's California. What you do on your own time is your business, but what you do on my time in my business is my business. And so I did not offer him employment back, which I believe, since you can justify, if I had an example of that, and I don't want to get into a personnel issue here because that's not the intent, but if you can actually dismiss people for cause and actually have them also count for your refused employment. So those are the exceptions that came out in the May 15th SBA forgiveness form, and they're very helpful in trying to meet me because I've got to get to 15. I got to have 15 right here. I need 15 full-time equivalents to meet that safe harbor rule. So let's look and see how my business has gone during this 8 or 10 week period. Right here back on week 1 of my covered period, which started on the 20th. So my first payroll was the 27th. There were actually 7 of us that were drawn employment. It had 7 people out of my 19 that were still on the payroll. And I say me, but it's just an easier way to say it. So that was true the next week too, because I know these weeks have already happened and those are actual results in my forecast. Week 3, the same thing. And week 4, doing takeouts and some family meals and some work with nonprofits and some of the other many things that we did to try to scrape a buck or two during the close down of the physical sit down, dine in portion of the restaurant. Week 5, things started to change and we started to gear up. And so we brought more employees back. We brought back a couple of part-timers and a full-timer to get ready for anticipating this week of being able to open the restaurant, which I'm glad to report has happened. And we'll reflect on next week's payroll here. So we're anticipating this coming week now that we've started up, bringing Sally back here. And also, and bringing her back and adding her, and you'll see our payroll has gone up now. It's gone up from 5,000 a week to 7,000. And now that it's starting to get a little more busy, we're anticipating bringing more people back to whereas by the 15th, which is our last day of the 8-week period, since our 8-week period ends then, we'll be back close to $9,000 in payroll. Now you'll see that this only brings us to, a total of 51,000 there. So that's not covering everything. So let's go back to the forgiveness form. Now you see where these numbers are coming from the gross payroll and kind of moving forward. We had a little bit of an employer 401k match, very small minimal amount, but that deduction was permissible under gross wages. And so we have a little bit there. We continued to maintain our health insurance that we made monthly payments the first week of the month, did those. And then the only tax that I list here is one for state unemployment insurance. And state unemployment insurance is actually a allowable deduction. And the reason it's listed and not state income tax or state disability is because I'm already taking the full gross amount of my employee's wages. So the employee will get paid the net amount. I already am getting basically credit for that because the employee is paying those taxes. But I pay the unemployment insurance based on them, and for state purposes, not for federal, that is permissible here. So that brings me to my 62,000 over here for payroll. I'm up to 14,000 in rent and utilities and electric and so forth. And there you go. 76,000 brings me back to my example up here of where I'm at 76,000 of a program where I could actually spend 100,000. So I'm at my 8-week period, which I think is pretty common problem for many of you out there. Being at the end of your 8-week period and still haven't spent all the proceeds. So the good thing is I can go back if we get another allocation of say 8 weeks or maybe 12 weeks, and I can continue to pay these employees and continue to actually take also the utilities, the rent, and the other expenditures that are permissible under the PPP. So in my forecast here, I do have then another 8 weeks, and I will easily cover the wages unless we have other unforeseen problems. But we will see that, and my goal here is to hit my FTEs on June the 30th. So I'm assuming I'm not going to have any employee change from the 29th, that payday. I'm definitely not going to fire anybody that time if I need them for my full-time equivalents. July 1st could be a different deal. Makes me sound pretty cruel and ruthless. So with this, what do I have as far as my full-time equivalents? I'm trying to get to 15 over here. As far as my people that I didn't bring back that I can say refused employment, I have 2. And so I only need 13 up here, of which I have, let's see, there's 3, 4, 5, 6, 7, 8, 9, 10. Right here, 10 with Barry right there, there's 10. 10 of my full-timers is 10 full-time equivalents. There's 2 of my half-timers, that equals another one for 11, 2 more for 12. And then down here, I have hired actually 2 additional people, and there's 13 and a half. I don't even have to look in to see if I correctly got rid of this person, because I'm at 15 and a half now. And there's my full-time equivalents, which has been my greatest challenge and my greatest worry through this whole process. This information will come onto the PPP forgiveness page. It'll list the people that earn over 100,000 initially and show their compensation. I reduced my compensation accordingly, so I wasn't paid an additional amount. And then have the rest of the employees here. On this form, I will have their last four digits of their social or other ID that they have, and then also their compensation for the entire period. And then this information will go back and get into detail very easily, starting to put together the rest of the forgiveness form. Okay. Hope I didn't confuse you. Forgiveness number 1, you might recall, for those that actually opened up your sheet from last week, was actually just kind of the same thing, but it's the actual. So I'm using this sheet as my actual. I'm using one to forecast and budget and to manage it all the way down to the end. And I'm using another one to come up with the results. Again, listing my employees. And you probably will not need to have a spreadsheet on each employee. You very well could have a computer printout from your payroll provider, your payroll software, your accountant, or whoever. It's just that I didn't have those, so I had to put together a little spreadsheet. And there's forgiveness 1, which is the actual. There's your blank forgiveness 2. If you want to go back and look at some of the FTEs, we're not going to go over this now because I want to get to some questions. But I want to go over one quick example that we went over back in week 5, and that was for sole proprietors and also independent contractors. There's been a lot of questions last week and a lot more that have come up, and that is based on self-employment and how much of your wage you can take. Now, please recall, we have a little mom and pop restaurant here, appropriately called Mom and Pops, and they do about $360 a year, of which they net about 70,000. So the 70,000 then comes down to average monthly earnings of 5833, of which they can take the 2.5 multiplier with most banks and end up with a PPP loan amount in the amount of 14,583. So of that, according to the rules that came out on May 15th, you're entitled to 8 weeks of that. So it'd be 56 days of earnings. I might have 2 months here because I have a bad habit of applying 2 months rather than 56 days, which there is a 4-day difference. So that could be slightly overstated, but for our purposes, it's fine. That's the amount of money that you can take. I recommend taking it in 4 regular balances, and it leaves you $2,917 that you can use for rent or utilities if you do that. A lot of people have household expenditures. I'm not sure how that's going to shake out. It's best to talk to your accountant or your tax advisor and see how you claim a business in the home. I would think if you've been doing it and actually have a formula and a method, my thinking, of course, this is just my best guess, is that you probably are able to do something if you can document it off of prior tax returns.
Kelly?
Yeah.
I know the SBA did come out with sort of an interpretation that is if in prior Schedule Cs, you had expense utility and interest and internet, that's what they're going to look at. And that's the same thing that the lender's going to look at. So if you're trying to get creative and do something now that you hadn't done in the past, that may pose a problem. But in the past, if you've expensed these things off on your Schedule C, then you should be, that should be acceptable.
Great. Yeah. it's hard to change the game after it's hard to change the rules after you've started the game. Okay, so let's, there's some safe harbor. And just one quick thing on my, I have to do this every time. And on this is, what do you spend money on now? So, you're managing your cash flow. You do have money coming in. So what do you spend money on now? And that's just try to stay in front of your customers right now, especially as businesses open up. And you want to make sure that when you stay in front of your customers through newsletters and through e-blast or whatever, is that you project a very safe and clean environment. That's important, obviously, and you want to continue to market to new customers and prospects. At times, we're trying to get our existing customer base back, but there's always that market out there for marketing to new customers and prospects. And we also have to be willing to pivot from a business model that maybe is reflective of the old way we do business rather than the new way. So be thinking about those as far as the cash flow goes. We'll be back next Wednesday. And now let's get to some of your questions. Okay, you ready for some questions, Keith?
Yep.
Okay, let's start with this one first. As a small office, can we require employees to wear masks in open areas? If not, to what extent are we liable if someone catches the virus?
Boy, that sounds like a health department question, not a lender's question. So I am not going to take that one.
Yes, that does sound like an HR good question to ask your favorite attorney. I look at it from another side also. Can you require employees to wear a mask? What happens if you have an employee that feels threatened because you have other employees that are not wearing masks? So, yeah,
Kelly,
I think that's best for someone else to answer.
I will tell you, Kelly, we've set up at my organization here, I have a meeting next month via Zoom with our HR contractor, and we're going to look at our HR handbook, and we are going to see, and adapt to what are the new rules for, safety within a work environment. I know there is some movement of getting some type of hold harmless legislation with small businesses, in whether it's an employee signing something. So that's one of those, I'd stay tuned, but it's definitely, if you're trying to implement something now, look what the county rules are, look what the state rules are, and you may use that as a fallback.
Outstanding. Okay, well, this is different. Question on our PP loan is that we used our funds in only 3 weeks. Talks about the covered period being 8 weeks, and the money being used. Can we use 100% for payroll?
Yes.
Yeah, and the only thing I would get back to on that would be on June 30th, you got to have the same amount of FTE still. It sounds like if you used your funds in 3 weeks, that you've either added employees or that potentially your business has done well, or you got a smaller PPP than you actually deserved.
Yeah, and correct me if I'm mistaken. I think it sounds like you're still eligible for some more PPP money. So it's something that you may want to consider. Usually when that happens, is their business ramped up quicker than what they had anticipated. But we're just guessing at this point.
Yeah. Well, the next question is regarding a self-employed individual and how much they can pay payroll. I think we just covered that. I'd go back to 56 divided by 360 or 365 and put it by the amount that you put in, and hopefully you can use the rest. When do you apply for forgiveness? At the end of your 8-week period or after June 30th, which I believe is the date to hire your employees back?
I would say after June 30th, and be honest with you, I would sort of kind of wait because any modified rules may work to your advantage. So I wouldn't necessarily get in that rush to apply. Plus, you're going to have a delay with the banks anyway. So I would, be patient, and if you meet the revised criteria, you're going to be fine. It's just a matter of timing.
Okay, next question. What is the limit that I can contribute to my SEP during the 8-week period of time? And a little bit more specifics is that limited up to 25% by tax law, up to about 60,000. He's identified $4,000 of PPP money. So can he contribute $4,000 during the 8-week period? So I would say if the $4,000 represents the 56 days of the retirement, then I would think yes. But again, that's probably a better question. Ask for your CPA or your tax preparer or someone else. I found out I was just approved for an EIDL and got deposited today. Congratulations. Am I able to pay back the EIDL and get the PPP instead if it is approved? I'd rather have a forgiving loan with interest in order to pay back my rent of my business.
Well, let me take that. I wouldn't be in such a hurry to pay that EIDL loan back. First off, you're not having to make payments for a year on that loan. Second piece, it's 3.75% 30 years. I know it's a loan, but you're not going to be able to get that type of term financing anywhere other than the other personal residence. So I don't know if I would be that excited to pay off that EIDL loan. I've told several clients that I think that's the best loan you can have. Again, emphasize the terms. There's no payments for the first year. There's no prepayment penalty, and it's 3.75%. So you got to think about what you can use those proceeds for and not get in a hurry to pay that off.
Kind of a similar type question is it's from Doug. Does the PPP borrower have to pay any interest on their loan before forgiveness?
Well, no. I mean, you're not having to make the payments on that for the first 6 months, if I remember correctly. And if you're going to ask for forgiveness, it's going to be part of the forgiveness. So if you're asking, are you going to have to pay the interest by the time you take the advance and get the forgiveness, then the answer would be no if it's forgiven.
Keith, is it too late to apply for PPP or EIDL?
No, it's not. The EIDL portal I check every morning. I stopped checking it twice a day. The EIDL portal is still limited to ag businesses only. Once that is opened back up, then as long as it's still deemed a disaster, then that will be still available. PPP, you can look for, ask your lender first, but there are still some lenders out there that are, taking PPP applications.
Okay. What is the formula for computing FTEs if not everybody is 50%? I have some employees at 15 hours a week, some at 25. I'll take that one. And Joel, there are a couple of different ways you can actually do that. And one way is you can assume that anybody 20 hours or less is a half-time equivalent, and everybody 40 hours is a full-time. So that's one way. And then the other way is you can actually take the actual fraction. So there is some management you can do along the way there, and you can actually look at which way would be best for you. So there is a couple of ways to do that. Next question is, can we use bi-weekly numbers instead of weekly on the loan forgiveness form? And I'll stick with that one too, and that's a definite yes. But on the loan forgiveness form, you're given two options. You're given the actual payday, after you get the loan proceeds, so the actual payday, or you're getting an actual approved alternative covered method. And that could be starting with the next pay period moving forward. And that is only available for biweekly and less. So if you have a payroll every 14 days apart or fewer, you can use that. So you can use whatever payroll you're using. If whatever period you're using, stay consistent and continue to use that. I'm a contractor. We're starting to see business pick up. That's good news. With the PPP loan, we are paying our employees. I am also receiving income from the work performed. Are both considered taxable income?
Well, work performed, I would think, is taxable income. So if are you asking, is the PPP proceeds taxable? I don't think they are.
Yeah, we looked at that and we said that the way it is right now, and that is subject to change because Congress has a different interpretation than the IRS, is that the proceeds that are forgiven from a PPP loan are not taxable. However, the employees that you pay out of that PPP are not allowed as a deduction against income. So Congress kind of meant for it to be the other way, but
that may change.
It might change. Okay, salons that were not allowed to open and receive the PPP loan, when does the 8-week period start? Well, right now it starts on either of those two periods that we talked about earlier, the covered period, which is starts on the day that you receive the funds, or you can elect to use the alternative method, which is the start of your next pay period. So salons, restaurants, dining restaurants, you're both facing that same dilemma to where some of you could be up to that 8-week period on Friday. That is really the hope and really the meat and the potatoes of actually going to a 16 or 24-week period, which Congress is discussing right now. Okay, here we go. Can you apply for the Kearn Recovers program if you have a PPP? The answer to that is yes, but preference will be given to those that did not receive a PPP. But I would still encourage, because the PPP is pretty widespread between business owners, as we found out, and the fact that, as Keith mentioned, you can still apply. So I would encourage you to do so if you think it's beneficial, and maybe to try to see if you do get that, if it runs concurrently with your PPP. But again, the preference will be given to those that did not receive PPP. If we have 30 employees on February 15th and only 28 on June 30th, do you use the forgiveness option altogether or just a portion of it? And you lose a portion of that. So there would be an amount allocated, maybe 28 divided by 30. And then you would lose a portion of that amount as forgiveness that would turn into a regular part of the loan process. Bruce asked if SLO, San Luis Obispo County, has a program like Kearn Recovers for small business loans. Bruce, I will ask Judy Mahan, my associate over there, my contemporary. Judy does a great job with the hot house at SLO, and see if there is something for, or you can contact her at the SLO SBDC. I have not heard of anything, but it's possible that they do. I do know that this funding that Kearn got was for counties that had populations of 500,000 or more. So I believe that SLO's is less than that. So I would say, at least from that same pool, probably not, but definitely check into that. I received my PPP on April 22nd. We're a seasonal business and hired employees in May for our typical season that opens in mid-May. We were not allowed to open. So we're paying our employees and may be able to start June 1st. Typically we'd have more employees, but held off because of the county restrictions. I'm concerned that our PPP usage will be less than I projected. Can I include an explanation? I think, Denise, your best call on this one is going to be actually the extended period, to where you will have maybe 16 or 24 weeks in order to actually get that.
I'm a betting man, Kelly, and I'm betting that there's going to be a extension given within the next 2 weeks.
They've got to. They absolutely have to, because it's just carried on so long and so far past, I think, the original intent. And the great thing is there's support from both parties. And so unless it gets caught into some other issue, which you and I don't think either of us see that happening.
No, there's enough bipartisan support that they've carved it out on a number of bills, and I fully expect it to happen.
I received my PPP on April 20th, and I pay my employees on the 1st and the 15th and the 31st. Can I start with the next period, April 16th to 30th? Pay period? Actually, you can. You cannot, because the rules for the alternative covered period are bi-weekly employment periods and less. So that's 14 days